Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We begin our review of the global economy with the key releases in the US, Europe, China, and Japan. Stock market indices advanced in the week and investors focused on labor market updates and overlooked international trade data. U.S. non-farm payrolls expanded at a healthy pace in February, and the growing job market also enticed more people to apply for jobs, which in turn increased the jobless rate to a two-year high, and annual wage gains decelerated to 4.3%. Moreover, job openings edged slightly lower, but remained at a high level, indicating that labor market conditions are healthy, despite multiple rate hikes over the last 2 years. The yield on Treasury notes declined on the growing optimism that policymakers are more likely to cut rates as early as June, providing another boost to the stock market's advance and driving gold to a record high. The European Central Bank also held its key lending rate steady for the fourth consecutive time in a row, and ECB President Lagarde confirmed that markets' view of rate cuts in 3 months is converging with the view of policymakers. Investors also reviewed the latest data on international trade from the US, Germany, France, and China, and the familiar pattern of the last 3 years was in full display. China's export growth is expected to be driven by the rapid rise of electric vehicles, renewable energy products, and lithium-ion battery shipments to more than 60 countries. Germany and France are finally benefiting from lower import costs for energy and stable demand for the high-priced exports to the US, China, and the Middle East. While the US shows no sign of improvement in its persistent goods trade deficit, the largest economy in the world remains dependent on the import of manufactured goods and energy products. In Japan, finally the era of ultra-loose monetary policy may be nearing an end as unions push for wage gains of at least 5% and inflation stays above 2% for several months in a row. For the last 2 decades, real wages in Japan have stagnated because most Japanese companies reinvested profits in foreign countries to secure new markets. But this exodus of capital also left employees with little increase in disposable income, stalling the Japanese economy for years and contributing to the population decline as many couples struggle to make ends meet. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury dropped to a 1-month low of 4.04% on hopes of an imminent rate cut after the latest job report signaled healthy but not too tight job market conditions. WTI crude oil price declined to $78.50 after OPEC Plus extended voluntary production cuts to June on the lingering worries of demand growth from China and rising production in the U.S. The natural gas price in Europe hovered around 26 euros and 50 cents per megawatt hour and retreated from a 1-month peak on ample storage, while an above normal temperature in Europe kept demand in check. The euro hovered at $1.09 after the latest U.S. jobs data stoked speculation of an imminent rate cut in the U.S., ahead of similar move by the European Central Bank not before June. The yen strengthened to 147 against the U.S. dollar after wage negotiations between large employers and workers' union are likely to result in wage increases between 4 and 6%, supporting the case for ending the ultra-loose monetary policy sooner than later. We now review key developments in financial markets around the world last week. The S&P 500 index and the Nasdaq Composite extended weekly gains on twin optimism of a rate cut and an artificial intelligence boom, driving semiconductor and tech stocks higher. European markets extended weekly gains and benchmark indices in Germany and France soared to a new high. European markets extended weekly gains and benchmark indices in Germany and France soared to new record highs after European Central Bank President Lagarde confirmed the possibility of a rate cut as early as June. The Nikkei 225 lost 1% on speculation that the Bank of Japan is likely to end its ultra-loose monetary policy on March 19th. After core inflation in the Tokyo area advanced, nominal wages rose at a faster than anticipated pace, but household spending continued to fall. China's stock market traded mixed after lawmakers failed to provide substantial measures to stabilize financial markets and revive the property market. China's exports soared and its trade surplus jumped, suggesting rising global demand for Chinese products. Indian market indices extended their weekly gains to the seventh week in a row on economic growth optimism, stable interest rates, and rising consumer demand. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Broadcom, the advanced chip maker, reported better than expected quarterly results and estimated revenues in the current quarter in line with market expectations. Costco Wholesale, the membership retailer, reported weaker than expected revenue in its latest quarter. HelloFresh, the German meal kit provider, cut its core earnings outlook for the second time in 5 months and withdrew its half-year targets. Mondi plc, the UK-based paper company, agreed to acquire a smaller rival DS Smith for £5.14 billion. New York Community Bancorp announced a $1 billion capital raise and a leadership change on Wednesday. Hugo Boss, the German fashion house, warned that 2024 operating profit is likely to lag market expectations. Virgin Money UK jumped 37% after a nationwide building society agreed to acquire the lender for £2.9 billion. Nordstrom plunged 9% after the department store chain reported better than expected results in the fiscal fourth quarter, but the company's 2024 guidance for the current year fell short of market expectations. Lindt & Sprüngli, the Swiss chocolate maker, reported higher profit despite cost headwinds in fiscal year 2023. Spirit Airlines and JetBlue canceled their merger plans, facing antitrust regulatory hurdles. Apple was fined by the European Commission $1.8 billion for its alleged abusive App Store practices for streaming music service providers. Moreover, company's phone sales dropped sharply in the first 6 weeks in China. Target Corp soared after the retailer reported better than expected holiday quarter sales and earnings. Next week in the U.S., investors are looking ahead to the release of February CPI inflation, retail sales, and industrial production data. Investors are estimating inflation to hold steady, and core inflation may show a slight decline, and retail sales are expected to rise, reversing the decline in January. Industrial production is expected to remain steady after contracting 0.1% in the previous month. In Europe, investors are awaiting the release of inflation figures for Germany, France, and Italy. In the UK, investors are anticipating the release of GDP, trade balance, and jobs report. In Asia, the People's Bank of China may cut its lending rate, and house price index is likely to show persistent price decline in second and lower tier cities. Japan is scheduled to release its final update on GDP, and India is set to release its wholesale and consumer price inflation figures. You can now review daily U.S. and global financial market news, earnings releases, SEC filings, stock movers, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on redera.com, keep up with financial industry events on eventsinamerica.com, and discover updates on ETFs and mutual funds on tickerfunds.com. That is all for today, and we will see you next week.